Hi, this is Randy Finney with the right side of the chart, and this is a mid-session update for Thursday, November 14th, 2019. I wanted to get a video out to members of the site, at this point in the day because I do have to, unfortunately, I have to cut out this afternoon. Hopefully it'll only be an hour or so, but I have to cut out sometime before 4 p.m. today. And so I'm going to get a video out to you guys on my thoughts here. The case for the correction, even though we haven't taken out 199.80, it's certainly increasing. It's going up, with each tick higher recently. Just to recap, if you haven't caught up on anything lately, this was the trend line, the 60-minute trend line on QQQ. We, as I said, I'll show you the one in NQ in a minute. We'll look at ES and some other things, but it's a clean trend line, a lot cleaner than the smaller ones that I had recently. And when I say clean, what am I talking about? I'm talking about a lot of distinct reactions along it and pretty long in the tooth. So recently we broke down, we hit the 263 support, back tested, went down. We were trading on that for a while. It was gap support and price support right here. We took it out today. So far pretty impulsive. Nothing big. We're only down 0.6%. You can see up top. No, you can't see up top. Let me shrink that down a little bit for you so you can see up top. There we go. So okay, about 0.6% down, and again, the story remains the same. Volatility is at the low end of the trading range for the last couple of years, and so you don't have any big moves going on lately. But what we do have is a breakdown, a back test. Hugging that support for the last couple days, and then breaking it today. That puts us in a near-term precarious technical posture. Is it a screaming or glaring sell signal? Absolutely not. It's not very impulsive, but we are below 263, and this is the one I think will do the trick, quote unquote think, who knows. 180.90, I think when that gets taken out, that'll probably open the door, and you should see at that point the selling start to accelerate, and if we are going to hit this target zone that I have down here. So there's QQQ. Here's how it looks on SPY. There's your trend line. Pretty well defined as well, fairly well defined. There's the bottom right there. Come in with that reaction, catch all these. You broke down, back tested, and so what I should do is add a little line right here on SPY. There you go. About you can see there's a gap. Well, the gap that line's in between the gap. You can add a bunch of lines here, but lately that's where we've been dancing on. We just had a reaction there. So around that level, if you want to say the bottom of the gap to be safe, let's do that. 307.27 and change or so. So watch that for the SPY. And again, it's these divergences. They just continue to build. Yes, the market seems like it'll never correct, and that's always, when you get that feeling, that's usually when it gets a little bit one-sided, lopsided, and a little too many bulls, too many longs, too confident, not enough put protection, not enough shorts in the market, and you can get some pretty quick drops. So we'll see. Those are the levels I'm watching. There's your target for you SPY traders, and let's talk about, I'm going to get to some trade ideas in our second. Let's look at ES. I haven't really updated ES in a while. Somebody had asked to post a chart on ES. Let's see. What we can probably do is fix this trend line right here. Put it down on that low. There's a reaction low here on the chart. I have a lot of trend lines there, but let's do that, and let's drag this trend line and see if it meshes closer to that QQQ trend line, and it does. So there it is. That is a better fit. I always say this, the charts are dynamic, and so is my analysis. I will constantly revise trend line. I'm not going to try to, stick with a trend line because I had it there before and prices must conform to that. No, if, as time goes on, you see more and more reactions. And again, charts are dynamic, and so should your analysis be. That's it. So SPY traders, that was the main trend line. I'll leave this one here for now. It may not come into play. There's a good chance it will. And I'm going to give you a horizontal level to watch as well that I think will spark the selling. So if we zoom in a little tighter, I just put a line there, horizontal price support level. I could pull it down a hair. It's give or take, of course. You have these, whipped through about 30.76 or so, and you can see some nice reactions there recently, and that's the level I think will do the trick. It was support right here. We broke it for a little while, then support once broken becomes resistance as it was. Then we regain it with an impulsive green candle, and since then we've been pack testing it. That should be comparable to that big 82, what I think is a pretty big 8200 level in NQ. So I'll get to that in a second. So there it is. You have that, and then that trend line just below. And for you ES traders, there's my minimum swing target right there. And quite likely, I think we can come down to this one here as well, 29.79 or so. Let's look at NQ. It's all about tech, and there's the big 8200 level. You can see as we zoom in tight. Before we leave that, look at the divergences just continue to build. So we walk higher on suspiciously low volume. Doesn't mean that market must correct. It just says a breakout to new all-time highs on such extreme low volume is a sign of non-confirmation. Doesn't guarantee the breakout will fail. Doesn't guarantee anything, but it certainly calls it into question. Where are the buyers? If it's all this talk, I've never. Well, no, that's hyperbole. I haven't seen such a quick 180 in just the last couple weeks from such. There was cautious. There's always your perma bulls in the market and your perma bears, but overall there was a lot of concern about this, that, the recession fears, trade wars, and all of a sudden that just seemed to be whoosh, wiped out from, again, what I can gather, reading, listening to others. And so you have all of a sudden what a lot of investors, and maybe they're right, you have just the perfect Goldilocks environment, low rates, all the recession fears are now gone behind us. Of course, being a little bit cynical there, we don't know that yet. And the one thing I can say is both the news, the headlines, and more importantly, investor sentiment is very fickle and can and often does change on the dime, just like it changed recently. So that's that. There's your 8200 level. We're still below it, but again, the bigger story was the breakdown of the trend line, the back test, moving sideways. That's not. And this isn't, a great confirmation of a breakdown. Usually you want to see impulsive selling after breakdown, or you back test and then impulsive selling after the back test. But as I said, this was more of my BOD, benefit of the doubt level, and it doesn't surprise me. But you can say what you want, but what's hard to argue is the fact to say that we're not in a trading range recently. Let me grab a different tool down here and show you right here. There's 8200. Other than this little brief spike below, which hit that trend line, that's where the market, this kind of rally has plateaued. So you can see it, and it could be either way. You could take it glass half full or glass empty. What I mean by that? Well, here's a trading range. And these things, you have, market moves up and down. Whether you're in an uptrend, in this case an uptrend, you move up, you hit a consolidation period. And that can break to the upside. And if it does, it's bullish. And if it breaks to the downside, it's bearish. Then you walk up and you hit your next consolidation period. And this one, of course, or that one I should say, broke to the upside. And now we've started this one. So this is... And you can see we go up and we inch up and then we trade sideways. We inch up and we trade sideways. So yes, it is bullish. Yes, the market's going up. But what these indicators, these are momentum indicators down here. And because they are diverging, that is showing you that the momentum on the rally is slowing. And that's usually not what you see or don't want to see following a breakout. I talk about this all the time in individual stocks. When you see a breakout, ideally, you want to see it on. You want to see impulsive buying, big green candles, follow-up buying, and you want to see it on above average volume. I like to go by at least ideally 1.5 times or better the average volume. And your broker will give you, depending on your broker, 60, 90, 100 day. Those are the usual common average volumes you can get from your brokers. And so this breakout, just like any other individual stock, is suspect and has a higher rate of failing because of those reasons, among others that I've listed. So and you have a lot of I think a lot of pent-up energy right now in this trading range. And as I just showed you before, when you pop these trading ranges, it's usually a quick move up to the next one. So that's where I expect. Now, the way technical analysis and trading works, it's these same support zones or consolidation zones should act as resistance, and that's why, not coincidentally, that's where my targets are set. So I expect if you drop from below 8200, it'll be a relatively quick move down here to 8122 or so, followed most likely by a reaction. If we don't get a reaction, that's a kind of a heads up for it might show you, hey, maybe there's something a little bit more going on here. Why didn't the buyer step in there? It's a a very obvious support level. Why didn't the dip buyer step in? So if you go through there, then of course the bottom of the range, then you had this spike up there, and then you come down to the top of the range, which again right now is what I refer to as my current maximum near-term swing target. That means that depending on what I see, I may extend that target, I may shorten the target, cover and reverse there. Again, the charts are dynamics. I like to get these levels out to you, and kind of my thoughts how I'm going to trade it, because by the time I do an update, get things out to you, the markets may have moved, or we may have reversed off those levels. So you have to have your own trading plan in place. If you are, an active trader and you're going to short NQ, or you're going to buy a dip, you need to, be prepared. Have your, either your buy to cover limit orders, or your, buy limit orders. If you want to go long, you can set a buy limit order above your preferred target with a stop somewhat below. There's a lot of ways to trade this, or any of the charts that I share. I may be bullish or bearish on a security. I may get that call wrong, but what I think where some of my primary skill sets lie is identifying key support and resistance levels that are likely to produce reactions. So if we do get a pullback again, the longs can step in. This might be, let's call it your scale-in zone from 8122 down here. So you want to take a third there, a third if we get there, and a third if we get there, if you believe the market's going to go much higher after the next pullback. All right, a couple other things. I won't get into each individual trade, but I'll just mention a couple updates recently. I'm showing you that the market looks like it's tired, and I think needs the breather, and I think it's coming soon. That's why I want to get the video out. And in that, so lately I've been, all the individual trade ideas that I've shared, individual stocks have been, individual stocks have been almost exclusively long trade ideas recently. And I did make mention in one of the comment sections over the last week or so to somebody, it's like a game of musical chairs. The trend is up, and so I might speak a bearish talk, talk the bearish talk, but I'm not throwing out all these short trade ideas. I haven't been telling you to, me personally, short NQ, short QQQ, short semis. Although get ready to. I've been actually looking for that turn in the market, but yet playing the rise in the market. Hence, go back and there's probably 60, 70, 80 or more individual stocks that were all long trade ideas recently. That's, I just want you to be clear that I can be bearish in my longer or intermediate term outlook, but clearly recognize a trend and play it for what it is. However, it's like a game of musical chairs. You get closer to closer. These wedges started to crack. We're not far below that support. So if you are still in any of those long positions, tighten up stops if you haven't took profits. A lot of those I said, such as the pot stocks recently, I was only looking for oversold, bear market rallies. I wasn't looking for, position for the next trend trade. Get in, get out. Some of those hit our targets, our earlier targets. A couple might not have, and that sector is not looking good anymore. The generic and generic and specialty drug stocks, some are looking okay. The biotechs. What was the one today? Goodness, there's so many out there. CLVS. Get in, get out. As long as the Nasdaq's going up, and there was that what I call dash for trash, which there has been, meaning low price stocks with questionable fundamentals. Anytime a stock like Clovis falls from $100 down to $2-3. Something's not right there. There's obviously some issues there with the company. So I'm not going to dig down into the company's balance sheet and 10Q and all that good stuff. Look at the chart and saying right now people are it's a risk-off environment. So these little beat-down biotechs, and I know this stock. I've traded this stock on and off many times over the years, and many like it. Get in, get out. And that's what I did. I mentioned the other day, where was it? 620, wherever it was. I can't remember. I took half my shares off. I told you I'd book profits, and then today at the trend line, that $7 target. Yesterday somebody asked us at the trend line, but the next target comes in around $7. We hit a high today of exactly, I think, $7. High 7.00. That point, raise stops, get out. I'm looking for reaction. You could see the arrows every time I post an update. If I don't, clearly, type out my thoughts, they're there in where I think things are likely going to go, and that's what I'm looking at. So I may recycle into this one. See, right now, again, I'm looking for just a pullback in the Nasdaq, nothing huge. to those near-term targets. And if we get there and Clovis is around the $5 level, we pull back to this level at the time, and I like what I see in the charts on both the NASDAQ 100 as well as this stock, then we recycle in and possibly look for a break of the trend line, position for a break of the trend line, and a move up here to some of the next targets. But as of now, like I said, I think it's a better time to be starting to take some long exposure on the off the table and or tighten up stops. If you're not a market timer, or you disagree and you think this rally has got a lot more bite, a lot more life left in it before we get a decent pullback, then just at very least trail up stops and let it ride. I mentioned that's what I actually did there. I didn't book. I wish I could tell you I booked hard profits at 7, but when we hit 7, came close to it, I tightened up and it was 692 or something, and I was out of that. All right, so that's that. Just be careful with these longs. If the music stops playing, meaning the stock market corrects, a lot of these will go down, especially these lower quality stocks that have had big run-ups lately. These are momentum trades. You get the momentum players, like myself, that get out, and they all decide to rush for the exit at once. These stocks can come down pretty quick, so just keep that in mind. And a quick update on nat gas. It's pulled back again to the 264 level. For those of you in the trading room gold members, yesterday I posted this setup here on nat gas. I posted as a objective long entry for nat gas or UGAS right there. Buy it there. It was on the right off the 275 to 2562 support zone. And then with a breakout, also an additional objective long entry on a break above this bullish falling wedge pattern there. You had the time unconfirmed divergence. Played out just beautifully. Reversed right about in the middle of that channel. So, we nailed the entry. Then it went on to breakout. And as I said in a follow-up, not only was a breakout exactly what you want to see. This is what I'm talking about. It was impulsive, meaning big green candle on good volume. And it did two things. So you didn't just confirm it on the impulsive nature of the breakout and the reversal of support. So a lot happened right there yesterday. But you also went on to confirm the positive divergence. Now from there, we continue to rally. It's already been, 5% or so plus gain from the bottom. It may have run its course, at least for the near term. So this was yesterday or today I did the update. And I said, look, you can take it here, 260. It's an objective long if you took profits or if you want to get back in. That was UGAS. I listed target yesterday at 1586 before it got there, and that was hit and slightly exceeded. So whoever, those of you that trade UGAS. But just an update on this one. It's back. It's still trading right around that 264 where I pointed out today. The divergences are in place, but when I look at this, it may jog down. I don't care to short it here. Could go. That doesn't mean it can't go down. I'm out of it right now. I'm looking for a potential re-entry, and what I think might happen, maybe a little bit lower. If it can hold here and move up, great. But this was a more objective entry. This is a pullback trade. You can try to catch these. I just want to update it. And if we do hold here on that 264 to 262 level, that's where I wouldn't buy it back much below that. If this is just the first corrective wave, which I think it is, that's why I'm doing the update. Breakout, corrective wave, come back down here, and next wave up. You can see next target there. And on a trade like this, you can just, even if you took it yesterday, you're still very profitable. Just let your, raise your stops to protect profits, or at break even at worst, and trail it up there. But I do think it's looking somewhere along these lines right now. And if we happen to come down a little more, we'll see if these divergences stay intact, and maybe we come back here again, and maybe we do get another long entry off there. So there's an update on nat gas. Again, that was posted in the trading room in the swing trading group yesterday. Okay, for the last week or so, it's kind of updating treasury bonds and making the case for an objective long entry. That was made both on ZB and more so, or as much so, on a pullback to major, an oversold pullback to a very key support level. You have the uptrend line right here. This is a weekly chart of TLT, the primary uptrend line, and this other longer term uptrend line all the way back from 2011, intersecting support levels. I highlighted it right there. Even when we dipped under, I said that's fine, and that's been a nice reversal. So for those of you, congrats that caught it. And I think it probably has more room to run right now, because if my correction scenario for the stock market plays out, today's nothing more than a pullback. It's not a correction yet. Then treasuries should continue to catch a bid. So that's almost a 3% gain so far in TLT or ZB if you're trading ZB futures. So just wanted to mention, so far so good for the case that was made there. And again, it's a way to be diversified. Here's have a little bit of treasury bonds, have a little bit of natural gas, have a little bit of coffee, corn, wheat, soybeans, stocks, long, short, cannabis, whatever, and what'll happen is one day you're going to be down on your pot stocks, but you're going to be up on your treasury bonds, and therefore you're not going to have that emotional impact. Because I can tell you from doing this for years, there's one of the or at least early on, the hardest part of trading is the psychological factor. And when if you have traded long enough, you know what I'm talking about. If you have an overweighted, concentrated position, or especially all your money in any one security, if you're only trading the indexes or you're only trading a certain stock or gold, you're going to be either very happy some days or you're going to be very upset. And when you're very upset, even when you're happy, it affects your judgment. You get overconfident, tend to take larger position sizes, tend to not take profits when you should because the trade's going up. You think it's going to go up forever. And likewise, when the trade is going against you, you panic out. You probably sell at the absolute wrong time. So I'm passing on tips that I've learned over the years. Don't let yourself get in that position, because at the end of the day, we're all humans. We're not algos. The algos, algorithmic trading programs, they just fire off. They're machine driven, and they don't have emotion, but we do. So the way to minimize that and not have it impact your trading so much is don't take unusually large position sizes via leverage and or concentrated position sizes in any one stock. Spread your eggs out. Don't put them all in one basket. So there it is. Treasury moving up nice, but it is coming up to support, and I would expect a reaction there unless we break down in the market today, break those supports. But otherwise, here's the thing: if you're in ZB or TLT, there's an objective area to either A, book some profits on that nice run so far, or tighten up stops just in case we happen to break that 159-ish resistance level. Just tighten up stops if you want to let it run. But based on the charts, I do favor, I'd just tell you, I favor a pullback off the initial tag of 159. How far? Hard to say. Again, it'll depend on this chart as well as the indexes, but maybe pull back here to 158, recycle back in if you take profits. And again, this is active trading stuff. If you are a member of the site, gold or silver, and you're more of a swing trader and this isn't for you, I'm not going to force trade ideas. I won't force. I did put out a new official second one on BYND. I think that has potential as a swing trade. But as far as things like TLT, why I'm not adding this as an official trade idea, because right now it's, to me, nothing more than a bounce trade, an oversold bounce off support trade opportunity. I don't see a multi-month double-digit return swing trade potential. Just get in, get out, and that's kind of the mindset right now. And if the charts continue to firm up, maybe it will become a swing trade, either short or long. I know, my kind of neutral to longer-term bearish treasury bonds, but we'll see. And on a related note too, and I just did an update on this. Yesterday? Here it is. Gold is now, gold went on to break out. I highlighted here. We were working our way down. Everything I like to see. Positive divergence on the 60-minute time frame, divergent low, rallied from there, broke out. Then we took out that 1468 level, and gold's moving up. So there's one where right now, if you're in it, or you want to take, if you're in it, great. I'd give it a little room and stick with this one a little longer. That's just me. That's what I'm doing, because we haven't even, again, the market's still right off the highs. It's not going up now. I showed you in that trading range we're in, but it hasn't corrected yet either. So, you get a correction now. This is just, I think, smart money. I like to consider myself in that group, maybe not, but smart money anticipating that we're going to get a pullback in stocks, and that's why gold's been moving up despite the fact the market's still right out those highs. So I think that's the early bidders. They're getting in at a good price, and then should you see the stock market break down, then you'll have Joe Obvious, it's long stocks until they drop 3%, then they sell their stocks and they run to buy gold. Yeah, at that time the whole thing will probably be over, and then the stock market will resume up, and then gold will drop. So that's kind of how I'm trading it. Get that if we get a breakdown and we hit those near-term targets on NQ and things like that, or get close to those, and gold gets somewhere up here to maybe that 1492 or this downtrend line right here, then while everyone else is buying, that's probably when I'll be selling, taking profits on it, because I'm just looking at this as a short-term tactical trade more than a strategic trade. But I might soon get back into gold and the miners as longer-term strategic trades, because I still believe that they're in a bull market with more room to go, and this has just been a 3-month consolidation period. I can't say that with the highest degree of confidence just because I think that's what it is. There's not enough in the charts to tell me at this point in time with a very high degree of certainty, yes, that is the case. You might get a little more bang for your buck if I'm correct on that, and there's some more upside in gold. Silver will probably catch up, play a game of catch up. I probably see silver coming right up here, at least that 1765 level, which would be from where we're at now, about a 4% run on silver. These are silver futures I'm using. You guys correlate, just you can look at those reactions, pull a chart of, I was on 60-minute charts, SLV, you can pull a chart there. So let's try to give you a comparable level. That would bring us right about here, and yeah, that's a good level. I'm gonna pull this line down, and I'll just put a new line up right there. Okay, so there is a comparable target right there. Let's just be a little conservative, put it a little bit lower, about 1649. SLV is the ETF. That's 3.5%, so it could go a little more than that, somewhere in there. And here's we had a triangle pattern here. It broke down from, so maybe come in and back test that trend line. So there's SLV. I'm not in love with the chart. That's why it's not an official trade idea. PPO is coming back up, testing the zero line from below. Sometimes you get rejected when you do that. We don't have 60-minute divergence. If we did, I might be more apt to add that on as a swing trade. But right now, I'm kind of thinking along the lines of, just another, few percentage points, and maybe get out and then wait for the next setup. And I'll wrap up here with SOXX, the semis, because if we do get a pullback in SPY and QQQ, and again, we'll get a pullback. It's just a matter of, does it come this week, next, 3 weeks from now? Semis will probably lead the way down. This chart doesn't scream short to me or anything like that. In fact, it's a pretty constructive chart. This is a 60-minute chart, but I just want to show you where I think the semis will probably go, down here to at least that 221 level. And there's a potential uptrend line. Let me tweak it a little bit here and give you some targets you might want to replicate on SOXX. If you like the leverage of SOXL or SOXS, that's a those two track the same index. The XOSL is long, SOXS is the short, 3 times short. Just pull that chart, and all you have to do to reconcile the levels is just look at the previous reactions. So SOXX is going to be flipped upside down. So for example, that 221 target, and there's a trend line that comes in there. That would be an initial minimum target. Draw it out something like that. Boom. And again, minimum target there. Maybe come on down here to the trend line. So we'll call that a target zone. And that would be just a 221 from where we're at now. That's about a drop. It's not much. About 5.24%, but of course you get 3 times that on SOXS, but it's moot because you have to adjust your position size down by a third, or else you're just taking a excessive amount of leverage and risk. But SOXX, here it is. So what you might want to do there is, let me go back to SOXX. That was the July and September reaction highs there. Now what you're going to notice here is that you don't have the same exact reactions here. Let's see, July and September. Now why is that? Well, 2 reasons. Number one, and you can read about this in the FAQ page, there was one of those reaction highs, there's the other. Number one is decay. Of all the sector ETFs, this is one of the worst. I can tell you the worst culprits are the gold mining stocks, GDX, or Nugget and Dust, I should say, biotechs, which are LABU and LABD, that go long and short the biotech sector, and then the semis, which is, I showed you, SOXS and XOXL. Why? Again, it's all explained in the FAQ page. It has to do with the volatility and back and forth in these sectors. So what you're looking at is function of most likely two things: that decay, where over time this thing you're going to be guaranteed to lose money. Even in a sideways market, the decay is going to lose over time. You don't want to hold these as long-term trading vehicles. The other thing is all ETFs pay distributions, and so you may have had a larger payout and distributions that knock the price down as well. But I just want to mention, so in this case, what I was trying to show you is how to reconcile the levels. And in here you don't have the equal reaction lows where you had those two reaction highs on SOXX. But those are the levels. So therefore, what you would want to do in that case is use this lower line right there, and even then know that over time it's been decaying, so maybe even adjust that down a little. Or you can kind of go in the percentage terms. That would be about 26%. See, that's a little hot right there. Again, what I like to do, and I do trade these things, by the way. If I'm going to say short an IRA where you're not allowed to short stocks or ETFs, I'll buy SOXX. But what I'll do is, and this is why for the official trades I'll usually use these, I'll just watch SOXX, and when it hits my target, that's when I'll cover regardless of where SOXS is, if that makes sense. All right, so there's some potential pullback targets, and like I said, probably I'd say this trend line. That trend line hasn't been visited in a while, so let me just say that's my preferred target right now, that trend line there, and possibly if things get worse right there. From a daily perspective, this chart tells me this may have room to go. We had a divergent high here, divergent high 1. That was a nice correction in the semis. Divergent high 2 right there. And now this is another divergent high. I always say divergent highs are not sell signals. They're merely indication of a trend reversal. Divergence can certainly extend. I may be showing you this divergent high over here if we continue to walk up, as long as it's still intact. However, what I do see, I see the PPO rolling over and poised on any more downsides. It's all kind of lining up right now, and this is why I want to do this video. It looks to me that NASDAQ's ready for that break. Even if it's just a small 3% correction, it could trigger this. That would give us the first bearish crossover on the PPO right here. That's when the white line, which is the signal line, crosses down below the PPO line or the orange line. Here, I have a PPO histogram. A histogram will show you when they cross. So let's look at that. Let's look at the last couple times we cross. Well, you can see that's when the histogram goes from green to red. You have your bearish crossovers, and when it goes back to green, you have your bullish crossovers. But here, let me get rid of that. So you can, like I said, that just shows you where the crossovers occur. But we can just take a line simply and show you. All right, we had the last bearish cross was right here, right? Well, look what happened. That came shortly after the trend line break, and there was still meat left on the bone for that trade. It went down, hit the trend line. Time before that, we had a bearish cross right here, which came almost perfectly with that breakdown right there. And now we have one pending. So some traders will use, I won't use these as standalone buy and sell signals, but they tend to come, especially when what I have, or what I like to refer to as clean separation and high level crossovers. Those two things. What's clean separation? Not this. These lines are flattened out. You're in a choppy range. Here's clean separation, where the PPO line was above the signal line for a while, made a high level bearish PPO crossover, and you had a correction. Next one was right there, correction, 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 and so one could assume that get that, we'll most likely have a correction that could easily bring us back to at least this uptrend line here. So that would be, if you want to hold out for that, you're talking now about a 6% gain. And now that I look at the daily chart, let me change what I told you a minute ago. So there's my preferred target, is about that level, 220. Why? Well, as I look at this daily chart, keep in mind, daily time frames are more significant. What I see on a daily time frame overrides and is more important than anything I see on a shorter term, like an intraday, like a 60-minute time frame. What I see right now on here on SOXX is roughly 3 equal highs right there, each one was slightly higher, and then a breakout above that level. So it would be very logical. That's a very, what I call a high probability swing target for a pullback trade. Even if this trend line, which I think will eventually go on to break, I do think you get a reaction there. So there's a trade idea for you. maybe I'll make it official. I don't know. I do like it, and it just needs a little work, and that little work would be the index is breaking down, because like I said, 60-minute charts aren't as clear to me as setting up for a sell signal on the semis, but I can tell you they'll go down most likely if the NASDAQ 100 falls. So there's your near-term target, and if you want to hold out and swing for the fences, you could ride out a bounce, if you get a good entry, with appropriate stops in place, and then position. Well, the best thing to do would be to wait to at least bring to a full swing position, wait for a break of that trend line there. Again, there's that wedge, which may or may not work its way up, and if it does, that's fine. If this wedge continues to work up in the coming months, and maybe even into next year, we'll see, then no problem. I'll just extend this trend line, keep an eye on it. I can tell you it's a pretty valid trend line, and then wait for that for a longer term swing signal where I'd position short for a trade that might last many weeks or even months or more, if and when we get that. So, all right, we'll wrap it up here, and like I said, I'll got to run out today, but I'll do a closing market wrap video or share my thoughts if anything big happens today. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.